Conrad, man from Inspired Money. So we've got a very interesting question for you. How do I achieve the best investment and insurance outcome without compromising cash flow? Is that actually possible?
I think, thanks, Lishan. I guess it is. I mean, the reality is it's always about understanding where your money's going and what it's doing for you. And Ruben touched on understanding the flow and the balance sheet and the P&Ls, and those things are important when you're looking at businesses primarily, because if money's being used in a way that it's being used once and never again, then obviously there's a finite use for it. But if you're using your cash flow to add further revenue streams or enhance the revenue streams that you've got going by increasing your efficiency in use of technology, so that your delivery of your service is a lot more profitable, then those things are very important. I'm guessing that's what you look at as well, Ruben, when you're looking at your client. The other side of it is when I talk to people about investments and making investing a priority, because the reality is that in most instances you can't retire until you have replaced your PAYG or your self-generated income streams, or you can't effectively retire. So there's many books on creating wealth that talk about investing first, with a view to generate the cash flow in the back end or the passive income streams in the back end. And that's something when I talk to any client and any self-employed person, is something to put at the paramount of the discussion and to make it a priority, because without that priority, everything else becomes a priority. And that's another adjunct discussion we have in relation to cash flow and where you spend money. And I guess in the last piece of that discussion is when you're running your own business, and I touch on this a lot with people, it's a case of if you're not able to turn up to work for whatever reason, be it health or some other priorities that turn up in your life that stop you from working, then there needs to be a fallback position that allows you to continue to generate that income stream or protect that income stream. And those insurances that come into place, be it key man insurance for a business that can replace a person to come and do a job, or income protection and trauma insurance for the individual in case they can't go back to work, is also beneficial. It's also cash flow dependent, but again, something that people don't prioritise early enough. And therefore, when you start with the end in mind and think, okay, well fine, I need to look after these things, because if I go and buy a house without those types of protections in place, and my income stream dries up, then I'm not going to have that house, or I'm not going to have that car. But many people go out there and buy cars and computer equipment, and will get them insured, but they will never insure themselves. Who are the people that are generating income stream to buy those assets? And it's quite a funny position to be in, because that's the reality. It's the first thing that goes, but it's the first thing that's required in most instances when things hit the.
So why do you think they're not doing that? I mean, generally speaking.
I think it's a case of prioritising and understanding, where to spend the money, and
they don't want to address that topic. They're scared.
In some areas, there is an element of that. I mean, particularly where there are cases of historical issues or health issues within families. There's a little bit of ignorance that's paid towards that. It's easier to not address it than to address it. Yes. But the reality is most of the situations are fairly simple to address. And cash flow funding for personal insurances can be done a myriad of different ways that don't necessarily have to hurt the bottom line of the business. So, it's better to investigate the options than it is just to stick your head in the sand.
Could you give us a couple of
please
ideas?
Yeah, sure. I mean,
we probably better than coming to you directly.
No, I mean, the direct conversation is always fantastic because it's more specific. But I mean, in general speak, particularly with people that have their own businesses, I understand that cash flow is king, and where you spend it's important. Deductibility is also something that people look for when you're looking at paying for things, and superannuation funds tend to be a forgotten thing with self-employed people as well.
Yes.
And through your superannuation fund, you can own some insurances, which obviously you'll get the tax deduction on the contribution to your superannuation fund, obviously dependent upon your personal situation, and then from that contribution you can cover off some personal insurances, not all, but some, and that's that's again washing money through a situation, hopefully using it with some investment philosophy behind it and some benefit to pay for some insurances, as opposed to all just cost and insurance based. So there needs to be some conversation so that the retirement planning part still is factored in the piece.
So you can get investment insurance without hurting your cash flow?
Without a doubt, yeah.